Welcome everybody. Thanks for joining Property Thursday. So my name's Chris Allen. Apparently I forget to say that. Really excited about today, and as I was just alluding to, more questions about what these two guys can do than anything else I get asked week after week, whether it's tax planning. Even yesterday I was on a Zoom with Thea, and his client is buying two properties, wants to build a property portfolio. When's the best time to speak about setting up a company? So that's why Chris is here. Angus, the number of people that contact me and say, I've got a client, he's looking for a place in London, it's for his family, it needs to be 4 bedrooms, needs to be an Edgware Road, and I pass across to you, and that's your skill. And as I say, you two are invaluable. So I hope everybody understands UCT, which is the new Greenwich Mean Time, because none of the three of us knew what that meant. But welcome everybody. And what I'm going to do, I'm going to go straight over to you, Angus, and you can tell us a little bit more about what it is you do it in-house.
Fantastic. Thanks very much, Chris, and morning or afternoon, evening to everyone. Thanks very much for giving me a bit of your time. I'm sure some of you have already been on webinars that I've done in the past, describing the in-house service and what we do and how we work with Holborn. So I'm just going to share my screen here. Hopefully you will all be able to see it. Oh no, sorry, that is the first error of this webinar.
That's okay. I tell you what, the other thing whilst you're doing that is just to encourage people to put your questions at the bottom, and then we'll read them out as we go. I think all three of us are fans of making it interactive rather than waiting for the end and then and reeling them all off. So numbers are still coming up. So thank you everybody. This is Angus from in-house and Chris Frame from Get Ground. Thank you for joining us, and back to you, Angus.
So hopefully you can see that now, the correct one. So in-house, what I'm going to just run through is not too much on the market, but more on the service that we offer and working with Holborn and the types of clients that we work with, because that is, I think, a question, as Chris said, that crops up quite a lot, is what do in-house and what do I actually do? So we are, in the simplest terms, a buying agent or a sourcing agent, depending on which country you're in and how it's described. So why would you use a buying agent, or why would your client use a buying agent? Well, the clients that we work with appreciate that having someone on the ground in London and in the UK who is focused on progressing their search on a day-to-day basis for a property is key, especially for those that are based overseas, whether it's the Middle East, Asia, and what we've seen even more so over the last 12 or so months with the pandemic, with travel restrictions, is that having us here, having that knowledge of the market and being able to progress things without them being able to travel has been invaluable. We provide a good idea of what represents fair market value rather than just relying on asking prices. What I mean by that is you can go on Rightmove, you can go on Zoopla, you can look at secondary market stock. Those prices that are listed on there may not necessarily be exactly what the property is worth. Estate agents acting on behalf of the sellers will very often pitch asking prices above market value to test the market, sometimes overvaluing by 10 to 15% on those prices. So it's having a knowledge of the market and guiding the client accordingly. Also, we're in a market at the moment where stock levels for good quality properties is a little bit lower. Competition is very high. It's very much a buyer's market at the moment. So making sure that you have all your ducks in a row in terms of, or your clients' ducks in a row, should I say, in terms of financing, solicitor, whether it's with Chris at Get Ground already up and running, or accountant, etc., before going to offer, is essential, because it puts the client in a very strong position in the negotiation process. It's quite important to note that selling agents or estate agents are acting on behalf of the seller. They are not acting on behalf of the buyer. Therefore, the buyer's interests are very often overlooked. In-house and myself, we are acting on behalf of the buyer. We are retained by the buyer to source them a property. So that is a key differential between us and an estate agent. We have the buyer's best interests at heart, and we're looking to do the best possible for them. Also, what we're finding in the market at the moment is that if a buyer is represented by a buying agent or sourcing agent, they are often looked upon more seriously because they are instructing someone to do something on their behalf. They're paying for a service, which can be very beneficial. We have a lot of relationships with estate agents, other property professionals, and corporates in the wider market to give clients access to properties they wouldn't normally see. So by that, I mean a lot of off-market properties that you would not be able to see if you're sitting on your laptop in another part of the world looking at Rightmove or Zoopla for whether it's an investment property, a holiday home, or a second pied-à-terre in London or something like that. A lot of the clients that we work with are higher profile or are transacting at the higher end of the market, and they want absolute discretion when going out into the market. They don't want the seller or the selling agent to know who they are prior to that offer being agreed. Therefore, we provide that discretion and that anonymity up until that point. So that, I suppose, in a nutshell, is some of the reasons why you would use someone like ourselves, or why your clients would. So why use in-house more specifically than just a buying agent? So we are a trusted partner of Holborn. We, as Chris said, we deal with a number of consultants and clients throughout Holborn. As a team, we have over 60 years experience in the market. That is both in London, other parts of the UK, and then myself working in Hong Kong for a number of years and buying London property on behalf of clients in Hong Kong. As a company, we have a very strong reputation in the market, and we're well respected by estate agents and other property professionals when we're acting on behalf of our clients, which again is beneficial in that negotiation process. Good relationships and contacts throughout the team, and again that leads us to getting those best-in-class properties and opportunities that you may not be able to get otherwise. I've mentioned the discreet aspect, so an anonymity for higher profile clients, and all clients in general, I should say. And we're a completely independent body. We are not linked to any estate agent or developer, and we provide a tailored service for each client that will work best for them. And as I mentioned before, we act for the buyer, so we have the buyer's best interests at heart, and we're trying to achieve the best possible outcome for them rather than the seller. Just to put some case studies in here, just to highlight the asking price versus purchase price, and then some of the property types that we've bought and why people have bought them. So you can see that the difference between the asking price and the purchase price, there is quite a differential a lot of the time. For us, that's great because we're saving the client that money that they may have if they'd done it themselves, just gone in at the asking price or maybe not negotiated hard enough. But what it also means is that by saving that money, we're negating the fee that we're charging them, and they're saving even more over and above that. You'll see there that we buy properties for investment purposes, second homes, self-use. So all of the above we can take care of. And the price range is enormous. So at the kind of lower end there, 750,000 was the asking price. We agreed at 691 for the client, all the way up to 30 million. So my colleague, David, is currently, that's actually a current one that we're working on, is a property in Holland Park for a chap based in Malaysia. He is looking for a second home in London. He had a budget of 35 million. This is completely off market. It's a connection that we had. The seller wanted 30, and we've managed to, well, we initially tried to get it for 27, but we're sort of agreeing somewhere around about the 28 million pound mark. So we do everything in between. But this is the kind of key column here is on the right hand side, what we can save the client, how we can negotiate on their behalf, and then how that's negating the fee that we're charging them.
Angus, Is the 30 million Malaysian one a Holborn lead by any chance?
Unfortunately, it's not.
All right, just asking. Just asking.
So the clients that we work with and their criteria. So where we sit in with the Holborn property offering is clients that are looking for something a little bit different. They're not looking for off-plan, new build properties in London or other areas of the UK. A secondary market stock that is not currently being offered. We work with private clients, family offices, private investors and institutional investors, and they can be based either in the UK or worldwide, globally. Typically, we would say that they would have to have a budget of 800,000 and above. But as you saw from the case studies previously, we will look at other budgets on a case-by-case basis. The reason that we have that in place is really because once you get below £1 million or £800,000, the conversation around fee and the service becomes a little bit stronger, rather, as opposed to someone who has a budget higher than that. But ultimately, as I say, we'll look at it on a case-by-case basis because some people do see the value in the service at price points below that.
Angus, somebody's asked a question, Angus, sorry to interrupt you. You mentioned off-market. Why would anybody want to sell a property off-market and not let the world know?
There's a number of reasons. Quite often it's people just don't want others to know that they're selling their house, whether that is family and friends, whether that's colleagues, or whether it's that they're a person of note and they want to do it on a discreet basis. Another reason is that quite a lot of buyers coming into the market at the moment are looking for an off-market opportunity so that they feel like they are getting something that nobody else was able to get. Having that kind of, what's the word I'm looking for? That mysteriousness around a property that it's not just sitting on a portal and everyone can see it, actually sometimes attracts a lot more interest. It may be that the price that that the seller is looking to achieve is maybe a little bit on the high side, and they know that. So they just want to test the market, find out if they get any interest at that level. But it does mean that we can go in and then negotiate. So there's a few reasons why you would do that. Actually, what we're seeing in London and Greater London at the higher end of the market, so I would say sort of anywhere from kind of £3 to £5 million plus, is that more and more transactions are taking place off market. And then when you get into prime and super prime London, the Belgravias, Knightsbridges of this world, where transaction sizes are 10 million, 15 million pounds plus, around about 40 to 45% of transactions are actually done off market. So once you get into that bracket of the market, actually having a buying agent or a sourcing agent working on your behalf who can access these actually is a huge benefit, because you would not be able to see them otherwise.
Thank you.
And then so on this slide, so as I said previously, whether it's a client looking for investment, self-use second home, we can certainly do that. And then the properties and assets that we source, so houses and flats, we've purchased blocks, if they're full resi blocks or mixed use blocks, we've done that in the past. Investment portfolios, whether that's broken or unbroken, land, and then I have put hotels on there because we do it on a case-by-case basis. But the caveat to all of those is that if we feel like we can add value to the client and the search, we will take it on. If we do not feel like we can add value to the client and the search, we will be very upfront and transparent. So that's why I put case-by-case basis in some of these. And finally, just a kind of stat just to finish off. In 2020, London had the highest value of property transactions in the world, which was around about $4 billion US. So not the most transactions, but the highest value of transactions in the world. There are a few outliers in that. I think a Chinese buyer bought a place in Knightsbridge for about 110 million and things like that. So there are a few things that bump that up, but quite an interesting one. So that's everything from me. Any questions?
That's great, Angus. In fact, Darren, who's our mortgage expert, has just come on and said that the fact it's off market would not necessarily affect anything with the mortgageability. They can get around that. So thanks for that, Darren. Always worth noting for Chris jumps on. Also, Angus, that I know that you concentrate most of your presentations on London, but you do look further afield for the right client. I know that recently you did a ski chalet in Verbier or something like that, and look elsewhere. So people shouldn't be shy of asking for at that range. Could you?
Again, it goes back to the point that if we feel like we can add value, we'll certainly look at it. So UK wide, definitely. French Alps, Geneva, Portugal, these are places that, Algarve, these are places that we've looked at and purchased for clients in the past. So absolutely, if we feel like we can do it, we will, but we'll certainly let you know.
Okay, sorry, Chris, with you in 1 second. JP has asked hotels, commercial?
Hotels, as I say, certainly case by case basis. It's not an area that we absolutely specialize in, but we have acquired smaller hotels for people in the past. Anything sort of over and above probably 50 to 70 keys, we've not really done much of. Commercial, we don't do a massive amount. Mixed use blocks, yes. If there's some kind of retail or commercial aspect on the ground floor and residential upper parts, something along those lines, yes. But out and out commercial, we probably are not the best people to assist. But what we can do is, if there is an inquiry that comes in for that, we can certainly steer people in the right direction, because we have contacts that work in that space that would be better placed to help.
Thank you, Angus. Fantastic. Look at that, 20 minutes. Chris, over to you. How's things in Singapore?
All good. Yeah, very good. It's a tough fact to follow, but yeah, no, Singapore is good. Singapore is good. Right now, I've got to do the technical bit and try and share my own screen and see if I can get that to work. But hopefully, everyone can see.
Everybody, get your questions coming in, because I know there was a lot of people asking questions only this week about exactly what Chris's expertise is. So we've got a lot of people on board here, Chris. So let's make it good.
It's fantastic. I'm very, very grateful, Chris Miltos, for hosting, and very grateful for everyone giving up a little bit of their time of their day. So good morning, good afternoon, good evening. As Chris has mentioned, I'm Chris. I'm personally based in Singapore. We've got an office obviously here. We have set up an office in Hong Kong, and then our headquarters are actually based in London, in Hammersmith. Initially, that was all sort of designed to make travel and making hubs a lot easier to access. But obviously, given the last 12, 15 months, that hasn't quite played out as initially sort of hoped it would anyway. But it does mean, hopefully, that someone will always be accessible or available on any given time zone, subject to where you are based, or indeed any potential clients are based. In terms of GetGround, I'm just going to run through a couple of slides. Very happy to answer any questions as we go, or at the end. But in terms of what we do, we very simply, we set up limited UK registered limited company structures, and then we run those UK limited company structures for the sole purpose of buying investment property in the UK. First and foremost, a couple of points just around that. Our services only benefit someone who is looking for investment. So I would say that if anyone is looking to purchase a second home or something for their own use, then GetGround probably isn't for them. And from a personal perspective, I would probably question the need for a limited company structure. But anyone looking for investment purpose. But yes, so we've obviously got offices globally. We focus very much on the investor, and the very simple reason behind that is that the use of a limited company when buying investment property in the UK, that the same principles essentially apply where for the reasons why limited company structures were invented in the first place. And that ultimately was to make businesses run more efficiently and more effectively. And at its most simple level, buy-to-let investment property is a small business, and those same principles come to fruition when using a limited company structure when buying property. In terms of what we do, we've essentially tried to create a unique solution. We have offered or created a solution that is very quick and easy to access for the investor. From a customer perspective, the entire process will take 20 to 30 minutes. A limited company would be incorporated within 24 hours, and then a UK bank account for that limited company would be open 48 to 72 hours thereafter. So a really, really quick process, very quick to access. As I mentioned, it can all be done online and remotely. Hopefully offers your customers a very comprehensive service, and most importantly, a cost-effective one as well. And the solution we've designed is essentially to make the benefits of a limited company structure more accessible to any and all investors, regardless of where they're based. The principles around why investors might use a limited company structure, we're not actually fundamentally changing those, we're just making those benefits more accessible by making or by removing the two biggest prohibitive factors that used to exist within the marketplace. Firstly, one of cost. It used to be very, very expensive to set up a UK limited company, or indeed any limited company structure, particularly for those based overseas. And then it used to be a very expensive entity to run that particular company each and every year, often going to thousands of pounds. And then the second one was one of time consumption. And it used to be a very drawn out process, very lengthy process to set up a company structure, often taking weeks, if not months. And then again, during the ownership period, a very time consuming process when looking to do all of the accounting and all the financial administration of that particular company. And it's really those two things that we've removed, hopefully, from the marketplace. So in terms of what we do, the company or the services are essentially split into two parts. Number one is on the company creation bit. And for that, we will set up and open and create a brand new UK limited company structure. We register that with Companies House, which is the UK regulatory body in the UK. We will structure that company in accordance with the wishes of the investor, or indeed investors plural. We will then produce, verify, create all of the legal documentation around that limited company, and that allows that limited company to undertake the activity in question, which is ultimately the buying and holding of UK property. That includes things like shareholders agreement. It includes strongly worded owner loan documents, which are quite important. And all of those legal documents have been created in accordance with a company called CMS Law, who are a relatively prestigious global law firm and actually act on behalf of the UK government as well. So create a very strong, very high quality legal documentation. And then, as I touched upon earlier, we will also open up a UK bank account for each and every limited company that we open. And again, all of those things can be done from a customer perspective in 20 to 30 minutes. Once the company is actually up and running and an operational business, we then take on all of the ongoing financial administration and the ongoing financial management of that particular company. That includes all of the accounting, all of the tax filing, tax auditing, bookkeeping services, company tax returns. We act as the UK registered office address, and we also undertake the role of the company secretary. Just be very clear, we have absolutely zero ownership rights over that limited company. We are simply the company secretary. That allows us to do the administrative work that is required, but it also makes sure that from a customer perspective, it is done in accordance with UK compliance, due diligence and regulation, and everything else like that. So hopefully a bit of a one-stop shop to really help this investment run very quickly and very smoothly, and take away a lot of the hassle that often goes into running a UK buy-to-let investment property. Just very briefly on sort of why investors might use limited companies. I sort of mentioned earlier that these benefits have been available or around for many, many years. And like I say, we're not really sort of fundamentally changing these, just trying to make them more accessible. The one that tends to get the most amount of attention, or indeed the most amount of focus, is obviously the greater tax efficiencies that exist. And that comes from the fact that our clients and the people we help are solely investors, and they care very much about the returns of these particular investments. I'm going to come on to those tax efficiencies just a little bit more detail on the next slide, but ultimately they help increase returns, they help maximize profits and create a more positive cash flow for you, or for indeed for your clients. Away from the financial side, there are a couple of additional benefits that exist. Firstly, there is a reduced personal liability by using a limited company structure. And the reason for that is that the company that we create is its own legal entity, and that legal entity actually takes ownership of the property in question, and with it takes on all of the debt and all of the liabilities that come with that, and so offers significantly higher protection to the investor themselves by legally ring-fencing this property, or indeed properties, and separating them individually, but also from any other assets and any other wealth that that person or persons may indeed have. It is a mechanism that makes it very, very easy to buy and sell with multiple persons. The reason that exists is that the company structures we create, they all have 100 shares, and those 100 shares would be split in and amongst any number of shareholders that exist. So it makes it very, very easy to allocate or apportionate a certain level of ownership to each individual. We've had clients previously where there's groups of 6, 8 people splitting those 100 shares in whole different guise of ways, but essentially makes it very, very easy to give each person a certain percentage of ownership of that property. And then importantly, if any of those investors who are in that purchase want to exit, they can do so by way of selling the shares that they own without the need to sell the actual asset itself, i.e. the property. So really, really easy mechanism to buy with multiple persons, and just creates significantly higher levels of flexibility around that. It's a mechanism that also helps improve estate and inheritance planning purposes. This is probably one that's best to discuss almost on an individual basis, because every individual scenario is different. But because of the flexibility that comes with the ownership levels and the ability to transfer shares or gift away shares, it makes it much easier to gift away a certain level of that property without necessarily giving up financial benefit or indeed financial control of that particular asset. And the only way to do that, if someone owns in their own personal name, is to actually give away 100% of that particular property to potentially a child or indeed a grandchild. And certainly from my own experience, there's a lot of grandparents that don't trust their 20, 25-year-old child with a 500 million pound property, etc., etc. So it enables people to keep a level of control. And the reason for that is that providing they maintain a share, a minimum of 1 share, then no one within that can do anything without full consent from every shareholder existing. So it just allows you to gift away a certain level of that. And that's linked to the fact that someone's estate on this scenario and using a limited company would be based on the number of shares or the value of the shares that they hold within that, not necessarily on the value of the asset in question. Happy to answer some questions on that because it can, but often it's a little bit more individual. And I guess finally, and this is probably the third biggest change that's existed in the marketplace over the last 5 to 8 years, is there's now a very well developed mortgage market when it comes to lending to limited company structures. One of the headlines used on the messaging that went out was last year in 2020 was over 41,000 limited company structures created for the sole purpose of buying investment property in the UK. It is a very rapidly increasing market, and as a result of that, a lot of lenders have innovated or moved into that market space and created products that are available to limited company structures. And in most cases, the underwriting process actually remains very similar to that if you were buying your own personal name, but there are far more options available and therefore far more competition within that marketplace.
I must say, Chris, I mean, I've obviously been in the property market, etc., for years and years, and the idea of setting up an offshore company to hold properties years ago was daunting and expensive. And what I find amazing about your presentation and the way you speak, it's now, I mean, over 40,000 just last year. Have you got any idea how to put that into context? How many were being done, or is that an unfair question to ask you, say 10 years ago?
Well, so I know that, for example, from comparing it to 2019, it was a 23% increase on the year before. I can certainly give that data. In terms of going beyond that, not necessarily. But I think what's really interesting is that in general, and this is very generic, but in common sort of marketing terms, it is often considered that there are 1 million property transactions a year that take place in the UK. Obviously, that can go up or lower depending on different market conditions. And generally speaking, it would be between 10 and 15% of that would then be buy to let investment properties. So all of a sudden, if you took, for example, 10% and 100,000 purchases for investment purposes, we're now getting very, very close to 1 in 2 is actually using a limited company structure. And I suspect that going back 3, 4, 5 years ago, the 3 reasons that we sort of touched upon, cost, the time consumption, and then indeed the ability to actually financing it, would have made that number significantly lower.
I think in future slides you go into the cost of it anyway, but I'm not going to take away your thunder, but it's incredibly relatively cheap. And also you've got government backing.
We do. I mean, I guess I'm just as sort of talking on it, I'll just jump to the fee slide and then I'll jump back one more just on some of those tax benefits. But these are our fees. We have a very transparent fee structure. The nature of actually our business is all about transparency, and that's ultimately a key reason why the UK government did invest in our business. We have a one-time setup fee, which is £500 plus VAT, so that's £600 in total. And that includes all of the setup services that I mentioned earlier on. So the opening and the creation of the company, the registration, the structuring, the verification and production of all the legal documents, the opening of the bank account. And then, of course, we would work with any other party that's involved, whether that's Holborn Assets, with a developer, mortgage brokers, solicitors, etc., to make sure that exchange deadlines or completion deadlines, depending on where someone is in terms of the property purchase cycle, all are met and adhered to. And as I mentioned earlier, the timescales that we can operate make it very, very quick. And then thereafter, we have an ongoing cost of £20 plus VAT per month, which means that an investor can run a limited company structure for £240 a year. That includes everything thereafter, all of the financial administration, all the accounting, filing, auditing, bookkeeping, the tax returns. It includes us undertaking the registered office address, and it does include the company secretarial services as well. And generally speaking, on a like for like, it comes in about 8 to 10 times more cost effective than the traditional alternatives. The primary reason we're able to do that is the use of technology. And as I proved at the very beginning of this, technology is not my area of expertise, thankfully. But there are a number of people in the business where their expertise is with technology. And it's the ability to automate an awful lot of these processes is why we're able to offer the services very low. And then in addition to that, the backing and the investment we got from the UK government, it's enabled our platform at the front end to plug directly into Companies House, which is where the creation element takes place. And probably more importantly, it plugs in at the back end to HMRC, which is the UK government tax division. And that just enables further levels of automation that haven't been available previously, which just means our costs remain relatively low. And then we can obviously in turn pass those on to customers and people using our services.
Just one question just come in, which I think you covered, again from Darren. Do Get Ground keep a percentage of ownership at all, even 1%?
We don't know. So the companies we create, they all have 100 shares. All 100 shares of the company itself would be owned either by the shareholder or the multiple shareholders if there were more than one. We have no ownership rights whatsoever. We are simply there to document and administer the activity on it, but we actually have no say in the way it's in the way that the activity or the way the company is run. The only thing that we would insist upon, and this comes up with the sort of the trust and the transparency element actually, is that the companies we create, the only activity they can do is buy and hold UK property. So the only thing we will forbid essentially is that these companies can't be used for any other activity, buying other shares, other investments, employ someone, anything like that. But no, in terms of ownership rights, we have none.
Another question just came in as well. Can the running of the company be managed by the investor directly or assigned to another company?
So I guess if we set up a company,
trust Stephen to come out with a difficult one.
I guess from a purely selfish perspective, ideally not. That being said, if we set up a limited company structure for someone, they have ownership of that entity. So if for whatever reason, and hopefully this wouldn't be the case, and we believe we offer a decent service and we offer a cost-effective one, but if someone did want to leave us and not have us as the administrator and the company secretary, etc., then they could take up everything that we've created and give that to another accountant. So that is absolutely possible.
But don't please do that.
I would, well, ideally not.
I would no. Okay, thanks, Stephen, for that. One question's coming from Baz, which is, what is the mortgage acceptance criteria? And obviously Darren's on, and he's probably going to be able to help more. But what is the mortgage acceptance criteria for newly established companies with no credit history? Can you answer that, or should we ask Darren?
I can certainly give an initial answer, and then very happy to let Darren either prove me wrong or add to it. We've not had any issues around that, and one of the reasons for that is sort of twofold. Number one is that these limited companies are set up for one sole purpose, and that is the buying of property, and solicitors and mortgage lenders like that. And then it also sort of feeds back into the fact that our legal documents are of a very good quality. I sort of mentioned the CMS law bit before. They sort of cover all bases. So both solicitors and mortgage brokers, or probably more importantly, mortgage lenders, are very happy with what we do. And then the last point I would add is that the financial accounts that we open for that limited company, the bank accounts that we create, are all compliant and work with mortgage lenders. So generally, we've not had an issue at all, but Darren might be better placed to give further detail.
Yeah, well, everyone knows Darren and email address we can get to. How are interest rates impacted if financed via the company structure? Oh, and somebody said, great service, Chris Frame.
Wonderful. That's very kind. Thank you. You can come again.
Darren.
I'll bring them onto every webinar I do. It's my rates. I guess rates can vary. Is the reality. There are scenarios where a limited company structure might incur a slightly higher interest rate than you would in your own personal name. One of the advantages financially of a limited company structure is that you can then offset that mortgage interest against your income in a way that you can't do in your own personal name. There are some lenders that just have a blanket product range whereby the rates are the same for personal name or indeed a limited company structure. There are some that do factor in. I guess it all comes down, and this is the case regardless of how anyone structures it. Mortgage lending is very much sort of case by case, and depending on so many variables in terms of where is the property located, who is the developer, who is the individual, what nationality do they have, what loan to value are they looking to borrow, are they employed, self-employed, etc., etc. So there's a lot of variables there. I would say generally they remain relatively competitive compared to a personal ownership. And as I say, one of the key benefits is that you can then offset that mortgage against your income in the UK, which more often than not would make it advantageous from that matter.
A question's just come in. If somebody has, say, 2 properties at the moment that they own, got mortgages on, but they want to continue to buy and build up a portfolio, have they missed the boat, or can they go back?
Not at all. Well, possibly for the first 2 properties, and with everyone, and I'm always very grateful for all the inquiries we get from Holborn. It's there's some great buy into what we do, and I'm very grateful for any inquiry we have. Generally speaking, if someone has purchased a property and they've completed it, it's very easy to move that into a limited company structure, but actually it's often very difficult to justify doing so. The easiest scenario if we were going through a property purchase would be to identify a property, set up the limited company, then exchange contracts, and then move towards completion. If someone has exchanged contracts in their own personal name but not yet completed, very, very easy to put that into a limited company structure. All benefits remain available. If someone has completed on a transaction and they have the keys and they have the ownership of that property, they can move it into a limited company, but the UK government would view that as a sale from an individual to a limited company structure, and therefore stamp duty would definitely be applicable again, and potentially capital gains tax subject to how long that property's been owned for the performance of that particular asset. So more often than not, the cost of that prohibits someone moving it post completion. We have had, I was going to say a couple, probably a handful of customers that have, but it tends to suit low valued properties, and then someone who's taking a very long-term view on it. That being said, if you are then looking to buy further properties, then those further properties, there would be a lot of benefits probably to be realized by using a limited company for the next purchase or the next purchases moving forward.
Okay, thanks. A question coming for you, Angus. Obviously, for the service you provide, there's a fee. And I remember you telling me earlier that's often taken from, because you're obviously getting a discount or trying to get a discount. Can you enlighten us a little bit more?
Yeah, so I actually, as Chris was going through this, I realised I hadn't put that in mine. So we take, I'll pop it in the chat just so that everyone has it in there as well. But we take an initial engagement fee of £1,500 plus VAT. That is payable upon signing terms and providing KYC and AML documentation. On completion of the purchase, we then charge a fee of 2% plus VAT of the purchase price less the engagement fee that has been paid. So there's the initial engagement fee, and then the completion fee is only payable upon successful purchase and completion of the property.
Okay, that's great. Any more questions coming in? Stamp duty, Chris. I'm sure you're being asked about stamp duty every day. It's on everybody's lips. The holiday, as it were, is a little bit more complicated than the headlines would say. You know, when you listen to LBC or BBC Radio 4, it's a little bit more tricky, isn't it? Do you get involved much on that? And you're muted, yeah.
We do. I'm just going to bring up this this particular slide, and we've sort of covered quite a lot of this just in sort of the bit of the Q&A. But I guess the headline is that if you are buying for investment purpose, and I guess the reason we've put an equal sign on this slide is, as at the very beginning, our services only benefit the investor. If you're buying for investment purposes, stamp duty will remain the same regardless of whether you're buying in your own name or indeed a limited company structure. There are two things that get factored into what the charge is for stamp duty. Number one is the purchase price, and then there's different percentages in different brackets. Number two is then the purpose of purchase. And if you are buying for investment, then that 3% additional surcharge applies. Doesn't matter about anything else. If the purpose of purchase is investment, then that surcharge will apply. And so that remains the same for personal or limited company structure ownership. I touched on at the very beginning that our services only really benefit the investor, and two key reasons behind that. If you use the limited company structure to buy a property for your own use, you will pay significantly higher stamp duty. And the reason for that is it's a flat rate 15%. Regardless of anything else, regardless of property purchase price. Whereas in buying for investment, you operate on the same tiered system as it does buying in your own name. The other big tax difference is that there is a tax called annual enveloped tax dwelling, which don't necessarily need to go into too much detail about. It's often abbreviated to ATED. And again, ATED is only something that applies to someone who has bought a property using a limited company structure that they then use for their own use. If you are buying for investment purposes, you do not qualify, nor is ATED a matter. So that's kind of one of the biggest elements around it. But yeah, as a headline, buying for investment using a company structure won't impact stamp duty. Sadly, it doesn't avoid it. And I guess one of the other big questions I've been asked an awful lot in the last sort of few weeks is, although we set up UK registered limited company structures, unfortunately, the UK government will look at the nationality, or the residency, I should say, of the shareholders in question. So unfortunately, despite us setting up UK limited company structures, that doesn't then qualify for that person as a UK purchaser, and therefore the avoidance of the additional 2% that has been brought in.
Thank you, Chris. I must say, every time we do these sessions, I learn something new, and I hope that the few people that are on this, quite a lot of people have joined, and I hope it's been really, really useful. All the slides are available. It has been recorded, even Chris's expertise on the technology side of things. Angus, thank you very much indeed. Always a pleasure. I hope you get lots of inquiries. I know you're busy at the moment, and you know, as I said earlier on, I listen to BBC, I listen to the radio, and there's so much talk about property and what's going on in the UK at the moment, so we're in the right place. Chris, I hope you get lots of leads. Thank you everybody for tuning in. Same time next week, 1 o'clock, Oh, hang on, that's not, is it? UCT time, 9 o'clock. Greenwich Mean Time, 9 o'clock. British Summer Time, 10 o'clock. I think we've got the hang of this now. So next weekend we're talking about all things York. They've got a new launch. So, somebody's no, too late for that one. Okay, thank you everybody. Thanks for joining in. Great guys. Thanks again. All the best.
Thank you very much. Thanks, Chris. Thanks
Thank
everyone.
you everybody. Cheers.